Hello traders out there in Traderland, my name's Dez. I'm a mentor and analyst here at Grok Trade, and this is the weekend edition. This video is good through December 5th, which is Sunday, and we have a lot to talk about, so stay with me. First thing I want to show you going into this video is that the Vix Volatility Index, the CBOE, is measuring volatility on option trading. And the futures, where the smart money is, still has the VIX going up into the future. You can see this. January is 22, February 24, in March 25, and almost 26 here in April, May 26 and change, June 26 and more change, and July 27. So even though we're not nearly as high as where we were just a number of weeks ago, we are, in fact, still going higher. That means smart money is banking on bearish activity going into the future. Next thing I want to show you is this. This is at FinViz, and we're looking at the groups. And this is sector rotation or group rotation that we're looking at. The thing that I'm specifically interested in is the financials. Financials for the 1 month has not changed. We're at break even. You know, we're not dropping, but we're certainly not over here doing overly well. Industrial goods doing the very best, up more than 5% in 1 month. Conglomerates such as GE or major companies that hold a number of different type of businesses are doing very well, which is bullish. Basic materials are up almost 4%, which could be indicative to bearish momentum coming into the future for anybody that watches economic type rotations. So keep an eye on that. Now, if we go up to, bring that back. This here is, we have the 3-month basic materials over, check this out, 17% in 3 months. Big rise. But financials, look how laggy they are, way behind everything. 6 months financials, laggy. Markets are only as strong as the financials. Basic materials right here leading for the 6 months. Listen, anybody that's in basic materials right now, metals, these material type funds, you may want to consider rolling out of those, putting stop losses in them, because I do see those wanting to pull back. They've been on quite a tear here lately. But let's take a look here at the markets. This is the daily S&P. We had a big symmetrical triangle breakout going into a bullish pennant, and that bullish pennant did in fact break out, and we are heading northbound. But look at this, we're at this swing high. We're at a crucial area. Gang, if we were to smack our head here and then drop, that could be the makings of a double top trend reversal pattern. If you don't know what some of these patterns are, such as symmetrical triangle or the bullish pennant or the double top, go to freeonlinetradingeducation.com, click on chart school, and enjoy. Great information there. But on the weekend edition, we like to pull in the weekly and the monthly charts. So the weekly charts, we had the big symmetrical triangle, broke out of that. We do a little bull pullback to a rising, or I'm sorry, to a 200-week moving average, and then we do a nice bounce after your hammer. Boom. We're here at a major area at resistance. We are above this moving average, the 260 moving average. We did poke our head over that, back in October, but we immediately came down. We are at that place yet again. The question is, can we go higher? The answer is yes, but will we? 1227 is what we're focusing on. We need to get over 1227. Right now, we closed the week at 1224, so we need to see more bullish activity going into next week to continue this bullish run. Now, on the monthly chart, which trumps the daily and the weekly, symmetrical triangle, we're just in a nice uptrend now. We have the nice higher swing low. All I did was copy this line, put it up here, and so we have a long ways to go if we're going to get up there. Now, the area we need to clear here is 1227, and also 1269 is an area of resistance. So be watching that. Now, let's also go to the Dow, and just let everybody know before I do this, the hedging dates. A lot of you are wanting to take this hedging class, which is a really good thing. I'm going to change that date, so I'll talk to you about it at the end of the video. But here we're looking at the daily on the Dow. We dropped down to these moving averages, and now we're rallying, doing pretty well here. We do have a hanging man formation on the daily, so we need to really keep the legs going. I like that we're above the 0 line on the MACD. Now the weekly on the Dow looks a lot like the S&P. We ran up, a little bull pullback, and now we're popping. This is very bullish, but we need to get over this 11,443 mark. We need to clear that swing high. That is so important. So that is what we are watching for. And you're going to have to watch this video a couple times to mark all these numbers down, because these are key numbers you do not want to ignore. Looking at the monthly we're going up, very nice. I'm going to copy this and put that right, about right there. So we have quite a ways to get up there if we're going to stay in this uptrend. But the areas that we are paying attention to right now, we need to clear 11,458 and 11,520. 11,530. Those are two key areas we need to get by for us to keep going northbound. All right, let's go to the Nasdaq. The Nasdaq, let's pull some data, pull this down. Right here, we are right now starting to clear these highs. That's pretty bullish, but we need to now clear on the daily 2593. That is what we're focusing on. So any bullish activity on Monday should get us up over that, and that would prove to be very good. Now the weekly on the Nasdaq, we have this big run up, a little bull pullback, challenging these areas. The number on the weekly is 2594. Or 2595. We need to clear that area, but we have a trend line coming up that we're going to deal with, so pay attention to that trend line. Let's look at the monthly. The monthly is right here. The monthly, we have a nice trend line coming up, higher swing low. I did a copy, so there's the copy of the line, so they're parallel, to make a nice trend or a channel, but we have some areas we need to clear. So the two areas that we're focusing on are very close together. We have 2593, 2604. Those are the two areas that we need to clear, and that's what we're focusing on NASDAQ. Now, if a lot of you are V newsletter subscribers, which we tend to trade stocks that are smaller in size, we're looking for not the 800-pound gorillas. We're looking for the 20-pound chimpanzee companies with the DNA of an 800-pound gorilla. We're looking for smaller companies with huge growth potential, and most of those are small caps, so the Russells becomes very important to us to know what it's doing. So let's pay attention to this. The Russells is clearing new highs. That is very bullish as far as the markets are concerned. I like that a lot. The area of resistance that I'm focusing on right here would put us at 764. 764 is an area I want us to get past that. But the daily looking quite bullish. And if the Russells are leading the markets, and the markets are still good for some upside. I mean, look at this. We're just blasting through resistance points. Boom! Looking really nice. And so that no wonder our bull list on the bear, on the V newsletter is so powerful. I hope you all are making tons of money. But anyway, the area that we cleared through is 754, 755. Next area, 775, 50, and then 800. Those are the areas I'm looking for, but we have a trend line that will also act as resistance. So we'll see how that plays itself out. And the monthly on the Russells. The monthly on the Russells, we have a nice uptrend, a higher swing low, and I went ahead and made a dummy line here. So that gives us a nice target area. And the area of resistance that I'm really concerned with is 765 coming across here. That's that swing high back in 2006. And that's what we're looking at. We're getting pretty extended here. We got a number of bars here, but we could keep going up. I want to see us clear this 800 really bad, and 850 would be a major challenge for it to clear anytime relatively soon. We'll probably come up, smack our head, pull back if the markets stay bullish. Now, when it comes to hedging, gang. We do have a hedging class. What does hedging mean? It simply means that you're adding trades or positions that offset your other positions. So if the market, let's say you have a lot of long positions going, you're bullish in the markets, you can put some bearish positions on that will help balance out your portfolio. So if the markets do take a nosedive, hypothetically over a weekend or overnight or over an earnings report, or an economic type report, if it takes a nosedive, you're okay because your short positions or your bearish positions will offset what your losses would be in your long positions. So what it does is it saves us from getting gray hair. It saves us from losing sleep or getting the jitters. It's very stress-free when you know how to hedge. So we will be teaching that. It's a 2-hour course. It's live and it's done online, and it will be on a Thursday evening. Mark this down in your calendars because we did say it was going to be on the 9th. I have since changed that because I just didn't have enough time to get it promoted. But December 15th, and all it's going to cost you is $147. $147 will give you our secrets, my secrets to hedging, and it is it's going to give you some incredibly powerful things. So anyway, if that's for you, soon I will have a website updated, and with that website you'll be able to read about it and all the testimonials from those that took the class last time. And also market internals. A lot of you like to day trade, looking to day trade or whatever. You have to understand what the market internals are, and we will be teaching a class in January on that. So keep your ears open for it. Listen, 2 weekends from this weekend video, we will be doing our very last 2010 mentorship at our introductory price. And this, I would like to have the chance to mentor you. Better yet, ask yourself this question: would you like for me and one of my colleagues to mentor you in trading? Well, that opportunity is knocking at the door. Our prices will be going up in 2011, and we're not sure how often we will be doing these mentorships. But right now, in 2 weeks, you have a golden opportunity to come in at a discounted price and to get the very best. And also to be grandfathered into our weekly, ongoing, forever, at no charge to you, mentor refresher webinars that we do each week. So anyway, that's it. Listen, as always, make sure that you focus on capital preservation, because that comes first. Because once that money's gone, game over. So that's unacceptable. What we do here at Grok Trade is focus on risk and letting risk be the thing that guides us in our trading. And we need to do that and do that well. There's no better way of learning how to manage risk than to allow us to mentor you. We have a combined trading experience of more than 40 years with the analyst here, and more of 25 years of teaching what it is that we do here in the market. So we wish all of you the very best in the markets, and safe trading to you.